Good morning, everybody. Hey, welcome to Thursday, May 28th. It's hard to believe that tomorrow will be the last weekday of May before we head into June. It's just hard to believe how fast, even with all the stuff going on, how fast this year is going by. Hey, I hope that your week has been good. As we head into these last couple of days, the market has seen incredible strength going up. The question is, will it continue? And if so, for how long? A lot of stuff coming out today, a lot of bantering with the president and Twitter. We'll talk about all of that with Dave as soon as he hops. So that'll be coming up here in just a few minutes. Hey, stand by. Looking forward to my conversation with Dave today.
Islands Light FM. That's Kenny Loggins there. I'm Morning Dave. We're at 8:38 now. It's 22 before 9. Time to check in and find out what Wall Street's doing to your money this morning. And just about anything you do in life is affected by Wall Street, even if it involves stuffing money into an old mattress, because if it goes nowhere, what Wall Street does makes its future value down or up, depending upon what goes on. So, hey, it all matters. Downtown we go to the offices of Statler Financial Services. Phillip Statler standing by. And, Phillip, we're into Data Dump Thursday from the federal government today, aren't we?
We are, and you know, it is a massive data dump today from the economic side, but it's also a big dump on retail earnings. So we got a lot to talk about today in a short time.
Absolutely. So let's run through the data while we got it. First of all, the Thursday report that comes out every morning, every Thursday at 8:30. First-time unemployment claims. What's really tragic is this almost sounds like a low number over the past few weeks. 2.12 million new unemployment claims filed last week, and that almost sounds low compared to what we were getting used to, doesn't it?
It does, and it's really pretty close to what was expected, depending upon who you look at. You know, they expected 2.05 down to 2.02. So you know, it's within 100,000 of what was expected. So here's what I saw watching the futures. As soon as that announcement came out, we actually saw futures starting to tick up significantly. And so we've seen it come back down a little bit, but we're obviously pretty much in the positive territory this morning.
Well, that's always good to hear as far as the index. Is one thing that you and I were chatting about before we went on the air, though, on the unemployment report. The other thing that came out, and this was intriguing, continuing claims decreased by 3.86 million this past week. That would be considered incredibly good news that we're actually putting a few people back to work with the continuing claims now ending. But you brought up a vagary on the Payroll Protection Program Act that really folks ought to keep in the back of their mind, didn't you?
Yeah, you know, I don't like to keep throwing water on stuff, but is that remember the Payroll Protection Plan, EP? There's a lot of businesses that were able to take advantage of that. And so most people got their money starting the middle of April, which meant they have to keep their employees paid through the middle of June at the earliest. And so I know of and have heard of several businesses that as soon as we get through that point, their business is not coming back yet. So they're going to have to furlough their employees. And I think that's going to be a bigger issue than what people are really thinking about right now as they look at jobs number. And so I think we will see another big push of unemployed folks come out between the middle of June and the middle of July going forward across the country because of that, because businesses are still not picking up. So, you know, once the money runs out that they've been given, they're going to have to lay people off to stay in business.
You know, talking to one of my restaurant advertisers yesterday, I talked to the lady and picking up some transaction information and money out of them, and they said, "Okay, how are things doing? Are you all coming back?" Just boy, it still is awful doggone slow. This is turning into that U-shaped recovery instead of the V we were all praying for, and I got a sneaking hunch as Congress continues to winnow things through. they may end up needing to extend or add on to that Payroll Protection Act to avoid that big spike in potential unemployment claims come the middle of June, wouldn't you think?
Yeah, I think they're going to have to do something, or they're just going to have to pay the unemployment, right? People are just going to have to deal with the unemployment. I mean, I know that's just an issue that businesses, if they want to survive, are gonna have to get lean and mean because they want to keep in existence. And so that's going to be an issue, is that, hey, if I can do stuff with less employees, I'm going to have to do that just to keep in business until the economy can catch up with me.
Yeah, it's really getting to a point of survival for some of the businesses, no doubt. Other reports out of the government this morning, they looked at the gross domestic product from the last quarter, and this is the second revision on it, so we're getting closer and closer to what reality was, and they said it was a skosh worse than they originally thought. 4.8% decline was the estimate last month. They said, it was closer to a 5% decline in the gross domestic product last quarter.
That they did. And if you remember, back at the first estimate was 4.8, and that was a big miss. The original first estimate was like a minus 3.5. And so this even goes down further. Now, it's pretty close to what most people thought the revised number would be. I mean, my folks thought it'd be a minus 4.9. So 5% negative is still in the realm of what most people thought it was going to drop to. And that's just not affected the futures much at all.
Okay, maybe it's because we actually had one bit of good news, or rather, shall I say, not as crappy news as we expected. Durable goods orders this past month, they fell like an absolute rock, down 17.2%. That's Armageddon level numbers, but at the same time, sounds to me like the market expected worse, didn't they?
They did. They expected a little worse, Dave. Not a lot worse, but they expected durable goods orders to be down almost 20%. And so we that's a good thing that we missed that one.
Well, yeah, it was nice to miss one number at the positive side anyway, because nothing else is looking all that terribly good. I'm looking at my futures this morning, and I'm seeing the NASDAQ index is going down in general. Everything else is still looking green. Facebook and Twitter getting an awful lot of crud from President Trump over Twitter deciding now to start inserting fact checks into his tweets. That's going over kind of like flatulence in church, isn't it?
Yeah, it really is, Dave, and they're messing with fire in terms of what Twitter is doing there. They are. I read some this morning that they are exempt from this Section 230 liability law or something, and so it looks to me like there is legislation fixing to be entered that would relieve them, and they would have to come in at that standard, which is the same standard newspapers and radio and TV have to adhere to when it comes to their news reporting. And so they would be liable if the news is terribly wrong, they didn't do all their due diligence. So that's interesting to see. And I know the president's supposed to come out with an executive order today. We'll see how that goes over.
It could always be interesting. That's one thing, just as an aside, that's always hit me. But whether I agree with it or disagree with it doesn't matter. But when a social media network takes the responsibility of starting to say, we're inserting fact-checking, we're checking and flagging things as being not necessarily true posts, that means you're taking a responsibility and taking a curating role instead of simply being a conduit. You got to do it all or you got to do none, or as you say, you can get in trouble with liability.
That's right. And so that's really what's happening with Twitter right now. And it's going to apply to all. I mean, when he signs that executive order, it's going to hit all social media. And so as we look at that, that's a big deal for them. And so, hopefully this may be a wake-up call for Twitter to be the platform and not the voice.
Yeah, I was going to say being a conduit is a heck of a lot safer than trying to be a curated voice. That's true. Few companies reporting this morning. We got some indications, I gather.
So we got a lot of retail has come out today. We've got start off with Abercrombie and Fitch, the apparel retailer. They had a terrible quarter. I mean, way worse than expected. They were expected to lose like $1.39 a share. and they lost like $3.29. So almost $2 more than expected. Obviously, that's affecting their stock today. They're down almost 4.5% this morning.
Good Lord, that's a monumental miss. I would kind of expect them to be one of the ones that would hold up a bit more, given the fact that they're on the trendy young end for their target market.
Yeah, that was a big miss there, and I saw somewhere their sales were down over 35%. So a big miss for them. Then we got a couple of winners, Dave. We got Dollar General and Dollar Tree, both reporting. The Dollar General beat by almost $1. It came in at about 75 cents a share. They came in at $2.56 and were expected to come in at $1.74. Same store sales, listen to this number, Dave, jumped 21.7%. Huge.
Wow.
Yeah, they're only expected to go up like 8.7%. So Dollar General having a really, really good quarter. A lot of that because of the coronavirus. They're trading up today about 1.4%. And then Dollar Tree, following suit, they beat by about 20 cents, almost 20 cents a share. Same store sales rising 7% compared to 4.4 that was expected, and so they also are they're even a bigger winner than Dollar General in stock price. They're up 8.5% this morning.
Wowzers! I'm surprised, but I guess not shocked at the fact that those two categories did as well as they did. During the pandemic, in and out, get in, get out quick, get what you need, and go back home again. It probably hits the lifestyle really well, doesn't it?
Well, it really did. If you think of Dollar General's new mode of operandi, they are putting in neighborhood stores. And so, it's easy to jump right out there. And they had a lot of stuff. I mean, when I was looking during the initial phase of the pandemic, it's funny. Looking for toilet paper, right? And so for a family member, and actually we're able to curate some there. So it was interesting.
Oh yeah, they were the only place I could buy my hand soap for a little while in there. They were keeping it in stock when nobody else could.
The last retailer I have is Burlington Coat Factory. Yep, and so another retailer, and they had a worse than Abercrombie and Fitch. They lost $4.76 a share compared to the $1.55 they were expected to lose. They are not giving any guidance. They're not getting beat up bad though. They're only down 1.3% this morning.
Evidently, folks expect them to come back once everybody's capable of getting out again. Resetting the table this morning. Yesterday, a big green day again on the Dow. We've been talking about hopium being the reason. Boy, we went crazy yesterday again. Dow was up by 553 points. NASDAQ up by 72. Standard & Poor's up by 44. We're safely over 3,000 on the Standard & Poor's. Safely over 25,000 on the Dow. Boy, everything comes up roses off of yesterday. Now, with all the Facebook and Twitter stuff, NASDAQ is a price-weighted index, so I'm kind of assuming they're negative, but the rest of it's looking kind of green to me 45 minutes early, Phillip.
They really are, Dave. It's a mixed boat with NASDAQ not doing quite as well. We've got NASDAQ actually down about 1%. Or $98, and that's a lot, like you said, based on Facebook, Twitter, and other social media venues. We got S&P 500 is not doing. I mean, it's green, but it's only up like less than 0.15, so it's up less than $4, right at $4 right now. And then the Dow's having a good day. It's up 0.75% today, $181. So it's expected to open pretty good this morning. On the commodities front, we've got silver up about 0.5%, $17.84. Gold's about the same. It's up about 0.6, up $1,721 an ounce. We've got crude oil slipping again today, Dave, down a little over 0.5% to $32.62 a barrel.
And as we've been saying, it sounds like reverse psychology, but we need that to go up a little bit more. World markets, the Asian rim was mixed, largely because Hong Kong is having real bad times right now with the issues with mainland China incurring on their their autonomy. They were down by about 0.75%. The rest of the Asian rim generally up. European markets generally up midway through their day today. Phillip, this takes advice as far as how to cope with this. We're on an uptick right now, but heaven only knows what could happen in a month or so. How do I find you to stabilize my retirement?
Dave, you're absolutely correct. We've seen a major increase in the markets, and folks that didn't rebalance like they should have when this thing started, now is a great opportunity to determine how much risk they have and what allocations they need to change. Give us a call at 863-382-0037. Schedule your financial x-ray. Follow us on Facebook. All you have to do is search Statler Financial Services. We'll come right up. Follow us there. We repost this broadcast every day. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturdays, 10 a.m. Sunday mornings on Highlands News Talk, 7:30 a.m.
You do that so well. We'll have to record have to record some drop-in voices for you. Phillip, thank you so much. We'll catch you tomorrow here on Light, all right?
All right, man. You have a great day.
You too. Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Remember,
folks, let me tell you, I really appreciate you tuning in today. Hope that your week is going well as we got a couple days left, and hey, the weekend will be here. But remember, if you've not taken a serious look at your portfolio, give me a call, 863-382-0037. We're here to help. Make sure that you're on the right track for your retirement. Talk to you tomorrow. Bye now.